you and I spend my time zooming around the world interviewing people on the best and brightest in the whole financial service industry about what is happening. And we've got quite a cool panel today, all about full stack insurance and whether that's a competitive advantage. First of all, I just want to introduce you. We have Sten, Christian, and Raphael. Can you just tell us, we've got to know a little bit more about who you guys are, but also what your day-to-day responsibilities are, what keeps you up at night effectively. Sten, who are you?
Hello, hi, I'm I'm Sten, co-founder and CEO at Zego. We've been running for 3.5 years, started in the UK. Initially, we focused on the gig economy, so we insure the Uber, Deliveroo drivers, but we insure it by the minute, essentially. So when they're working, they're insured. When they don't, they are not. Today, we insure half of the food delivery market in the UK, and then we are in 6 markets in Europe. And, we're a team of 175 now, and we also, in October, got our own insurer license for the UK. What keeps me up at night? The next 100 hires. We onboarded at the rate of like 1 new person a day in the last quarter, and I just want to make sure that the next hires are very strong, exactly live by the values we live by, because after 250 people or so, then whatever you have is set, and that's how it's going to look when it's 2,000 people. So I just want to make sure that that's very, very strong. So,
absolutely. I mean, everything all comes down to people at the end of the day. Christian, yourself, and obviously you're based in Germany, right?
Yes, based in Berlin. So Christian, CEO of Element. We are a classical insurance company because we have the license already, but of course we consider us as a tech company. You see this by the distribution of our people. About 60% of the people are tech and product. We are not quite there, 125 people. What keeps me awake, it's similar topics, less about the individual hire. It's more about how to combine the different cultures. So you have insurance people that are experts in insurance. They normally have not so much clue about tech. Otherwise, we wouldn't have the problems out there. The same on the development side. They normally don't have a strong experience in the insurance side. And then you have the funny business people that know everything a bit, but nothing really. And these 3 cultural elements to bring together to form one element culture.
Excellent. And Raphael?
So hi everyone, I'm CEO and co-founder of Luko. Luko is what we call a neo insurance. So we provide home insurance in France for now. We launched in September 2018. We've been growing really fast since we launched, and we now insure more than 30,000 homes. And I think what is probably different from the other speaker, we basically have a quite traditional insurance coverage, which guarantees that are on the market today and that you can find at more traditional legacy carrier. And where we innovate is much more on how you consume insurance, so how you get paid or how your issue gets solved really fast when you have a claim, or how you buy your insurance, if you understand your insurance or not. So we are probably less innovative in the product itself and much more innovating on how you interact and use insurance. And what keeps me up at night is operation. So it's a huge challenge, and my biggest challenge today is to deliver the same quality and the same customer experience we were providing when we had 100 homes, and doing this when we are still growing at 40% every month. So that means a lot of hiring, a lot of process, a lot of technology, mainly around claims and how we can fix water damage, fix fire, or anything.
Excellent. Right. Well, let's get straight down to it. Full stack insurance. How would you view what full stack insurance is, but also what are the other options? How else can you insure people?
So we have a weird model in a sense that we started out as a broker or an MGA, and we still are, but we also have our own license. So the way we think about this is that we have license where we probably put like 20-25% of the business, and the rest then we work with other insurers. So today we work with another 3-4 insurers. The main reason why we got the license was to have control, right? So if we are raising tens of millions of money, we've raised like $52 million of funding, and if you raise lots of money and then you can't have the control, like somebody else decides how much power you're going to have, can you do your dishes today, or you can only kind of cook food, you know, it's like it's a very nervous place to be, especially as you are building the company. So that's why it's more for us is for to, in case like something happens, we have a license, and also secondly to innovate. So we think about it like you have in a supermarket, someone sells crisps. There's lots of all those great big brands, but also they have their own brand. But then with their own brand, they can change the size of packaging, they can change the flavors, they can really innovate quickly, and then pass on the knowledge and expertise to the other ones they work with, so that they can then innovate faster. So that's one of the main purposes why we did this. When you're growing super fast, you just don't have the capital to just support in terms of regulatory capital. So that's why we are not 100% full stack. But this is one of those kind of vehicles, and we operate both depending on how it works. And then we split based on kind of an algorithm, I'd say, is one lead for our own carrier and then 4 to others. And then kind of there's an agreed formula as how the actual business gets split.
Absolutely. That's quite I'm trying to think of other insurers in the market that have that same sort of model, so that's quite unique.
Well, yeah, exactly. Like if you think about most US InsurTechs, they either are full stack or they are fully as an MGA. There's no kind of a middle ground in that sense. We'll have to see whether ours works or not. But as we've been very upfront and honest with insurers, and it has worked so far, because we all want the business, but we all have restrictions, be it capital, be it type of risk, and so forth. So we, for example, insure Deliveroo drivers, or like the food delivery. Then we insure Uber drivers. Then we also insure the electric scooters, right? An insurance company has a different appetite for different type of risk. So that's why we need to kind of find the best match.
Absolutely. Christian, from your business model at Element, how would you define, first of all, your sort of take on full stack, and how do you fit into that?
So if you define full stack as the difference between somebody who has a license who doesn't have a license, fully agree. So we build it straight out of our own technology, so own middle layer, own core, whole proprietary stack, but always with our own license. And the reasons have been mentioned. It's the flexibility. So we provide now everything from accident, home content, liability, financial loss, cyber, private and SME, the mobility space, item, warranty extension, and adapt that for our partners. We only do white label, so adapt it for our partners in a fast way. You need to underwrite it and create the products yourself. You need to administer themselves. If you consider full stack as what you see from the AXAs or something, that sometimes from even internal reinsurance to every bit of operations, to every bit of software, of having your own servers or punch cards or whatever, to your own distribution, then the question is that full stack model a model of the future? If you look at any other industry, you see a fragmentation of the value chain. In banking, it happened 10, 15 years ago. Automotive, you buy a BMW, you don't ask the car dealer whether the clutch is from ZF or from Bosch or from Schaeffler or something. Yeah, you buy the BMW of it. So I'm pretty sure that the value chain will be fragmented. There are a couple of reasons when you're full stack. So when you have a license, outsourcing a critical function is quite difficult. That's another reason why we have the license, so that we're on the same regulatory level, so that outsourcing to us is actually very easy. And then there's a tax issue, of course, with the VAT and the insurance tax issue. But we will see very much in the future in this very, very fragmented market we have in continental Europe. UK is a bit different.
I'm so sorry about Brexit, by the way.
And you're gone anyhow. You will see that these myriads of small, especially P&C players, will have difficulties to offer everything themselves in-house. So they will rely on hopefully younger companies to provide them services.
Absolutely, and as you said, the whole value chain is becoming more and more fragmented across every industry, so why shouldn't insurance be any different?
If they take the front end and then provide a coverage only, that's one thing. Or if they own the customer and then perhaps give product creation, underwriting, pricing, or to us, that's for each company then to decide where they have the value add. I just don't believe that small to medium-sized carriers in 10 years will have the competitive advantage on the whole value chain. Very unlikely.
Yeah. Raphael, from your perspective.
So yeah, I think it's very interesting to ask what is full stack and what is a stack. So in our essence, we're full stack because our mission is to protect homes, and for example, we design hardware to prevent water damage. So we are very full stack because we invest a lot into hardware, AI, and to prevent our home, which is our mission. And we are not yet a licensed insurance. Are we becoming a licensed insurance? We have no religious approach to this. We believe in our business to start being a MGA, offer you the flexibility to focus on customer acquisition, retention, basically doing a good product people want to have and people want to buy, and also doing our technology to prevent accident. And when we will be slightly bigger in terms of scales, it will probably make sense for us to become a licensed insurer. But even when you're a licensed insurer, you still need to be reinsured a lot, especially in property insurance, where you have very big climate events. And so I don't see being licensed or not being licensed as a black or white things. I think the relationship you're building with reinsurer from day one when we had zero policy to when we will have millions of homes are actually the same players, the same kind of relationship. In insurance, it's a very regulated industry, of course. You always have to deal with someone who will take care of your compliance, your regulation, your capital. It's either the ACPR in France or the regulatory organ, either your German partner as a reinsurer. I don't think it's a radical switch. So it's more incremental improvement in your value chains and where you want to invest more time, invest more capital. But it's not a black or white answer, I would say.
I agree, it's not black or white. I think the capital one is actually not the biggest problem. So then you have some regulatory capital, because if you buy coverage then with the underwriter, they will charge you for having that capital. So somebody has to have the capital, and that cost will occur at the end customer somewhere. So the capital argument I don't buy. Somebody has to have the capital, and somebody will ask money for that capital. I think there are big advantages if you start early with the license. That I think it's very good that you started with the license, because then as a tech company you organize your regulation, your compliance as you would do it as a tech company. So you have everything in Jira or even Salesforce. So compliance is easy. Your compliance manager can follow, backtrack, see everything. It's not done on paper or by email or something. It's legal, or whoever has to give an approval. So it's a ticket over there. It's clear who out of the legal department approved when, what, with what kind of restrictions, who answered to it. So compliance or risk management can via a system cover and report to the regulator. So solving the regulation and compliance issues as a tech company, I think tech solves complex problems, is much easier than as a traditional carrier. It is still, as a young company, the burden is quite high on the reporting side, but you have to set it up once, and then I think it works.
Absolutely. Did a little exercise a couple of months ago, actually. Now, I wrote down everyone that I thought I was insured with, and the amount of people that I had absolutely no idea who was actually underwriting the insurance was huge. My home insurance, via my bank, I don't know who's actually people underwriting it. So when it comes to the competition, it's the channels aren't as brand focused as perhaps in other industries. Raphael, you consider yourself obviously full stack. how, when it comes to onboarding as many customers as possible, how does that give you access to more markets, more people? How does that give you that competitive edge from your perspective?
Can you, as a brand, you call? Can you?
Not so much as a brand, more as a product as opposed to a brand.
So we really focus on the customer experience, how we make a product people can understand without sales guys or without anyone on the phone or in retail. So using simple word, using clear coverage, explaining what is excluded and why it's excluding, getting back to the basic of insurance. We built a customer service that reply in 10 seconds on the chat with real human. We have a transparent business model. So we came to insurance because we were selling protection technology to insurer, and so that insurer were very far from the consumer and not talking to them. Actually, a lot of insurers are a bit scared of spending too much time with their consumer, and we have a very like consumer brand approach, option value to our business, and I think it really, I mean, consumer today expect something they understand, that is fast, that pays fast when they have an issue. So the market is willing for this. N26 has 1 million customer in France, or even in Europe. Revolut has even 11 million customer in the world. And so the market for more simple, immediate product is there, but the industry is not there. And so we didn't even do that much marketing. I think it was just a very good product market fit. Just people want simple insurance that they can understand. I think the understanding is the biggest part, and so they were buying our product. And then the question is more how you build defensibility and how you differentiate from a lot of new digital insurance, because the entry barrier to this is quite low. And I think it's by creating a product people really want. So in our case, it's creating a product that prevents accidents in your home and help you to be safer and greener in your home. And at the end, insurance is not a product itself. For me, it's a business model, or it's a services you give. But you need to build a product that give a reason for the good insurance customer to switch. And if it's only marketing and a nice UX, you're not changing everything, because insurance is not a product you use, so you don't have, if your insurance or if your bank sucks, you see it every day. If your insurance sucks, it doesn't change anything. So you need to, the way we approach is we want to productize something that is now a contract, we want to make it a product, and this is going beyond just a coverage, and this is why we focus all our resources and energy is building a home service company rather than building a home insurance policy. I think this is.
I do this for you, and you do the custom part.
Okay.
That's why we only do B2B and only do the back end. We very much believe that there are lots of people out there who will cater customers in specific areas, being it incumbents, that could be a distributor, that could be a price minister in France, that could be a Fintech, but that could also be existing insurance incumbents that have a brand, that have trust, that have customer data, that sometimes cover specific areas, regions or bakeries or carpenters, or young startups focus on a certain group, and then we have the flexibility to provide the products for them.
But I don't think it's because we started by the front end and something like very consumer value driven, that startup like us or other, we will not go like way more into the back end. So we probably in 6 months from now gonna have the best underwriting engine on our industry, and the same way neobanks. I think the parallel with neobanks is really strong, because they really start with a very lightweight banking model and regulation status, and then go way deeper in the core banking. I think this is the way we will go.
It's a good metaphor. I like that.
I think that's exactly what you just described. The problem is why someone is full stack or why someone is not. Is like from your side, and what was at the beginning with us as well. You gather so much more data. You're a lot closer to customer. You understand the customer significantly more than the underwriter does. But then if you want to change some underwriting criteria, it's almost like raising a new round of money. It's worse than that. You just have to go and pitch and convince them. It takes like 6 to 8 months time. For example, we know the time of day a customer works. And you could argue that if somebody works during the daytime in city center, the speeds are 10, 15 kilometers an hour, it's highly unlikely there's going to be bodily injury. If they work at the nighttime on the main roads and going fast, the chances of bodily injuries are a lot greater. How do you now then take that into the underwriting criteria with the underwriter? And I think that's sometimes quite a strong disconnect between yes, there's a disconnect between MGA and the kind of underwriter, because underwriter don't understand the customer actually, and they've got their own claims data, not any of the behavioral data, how actually when someone works. And it's like, how do you bring those together? And it's been, from our perspective, it's been really, really hard to convince them. Like, average price change used to take 8 weeks, right? It's painful. You can't like operate on an 8-week cycle, for example. So that's, I think it's very, very key, is like, the MGAs get frustrated, and then it's like, what am I going to do here? And the underwriters, and also often, to be fair, MGAs just don't understand underwriting either. They just think, oh, we'll just do this and that, and there's a bit of naivety there. And I think that link is difficult, and that's what you see, like, especially in the US, you're either a full stack or you're an MGA, and that's end of the story, you know?
But yeah, we are a bit late now, but there will be more than that are coming. So we want to be the service provider that you don't need a license. We use the data of our external partners in our real-time underwriting. Call it underwriting, call it the pricing, depending on the model. It is out there, and we of course then would utilize your data, play back the policy in real time. You can even manually override it for whatever reason, because you want to sell a car and the warranty extension. You want to give a discount to convince the user to buy the car. This is what we want to provide, so that you don't need the license and you don't have the time lag and the data lag and the understanding.
I totally agree, and that's exactly a great solution, because which like, it's almost like that's a great kind of I guess I'm talking about the large insurers we've been working with, RSA, some of the other worldwide, even like there's another dozen who we've never managed to get working with. But this is exactly the point. If you get the kind of tech underwriter working with tech MJ, then they can talk to each other. Data can flow, and their kind of a knowledge will massively evolve. That's why it's this in kind of a strange world that there aren't that many tech-driven underwriters out there. Once that kind of evolves more, then that's great, and then it'll become a lot more easier. So.
Can we look a bit further into the future, a bit longer term? Because, I mean, the neobanks is a great example, because at the moment, looking at, say, the UK market, they're there, people use them, but in terms of a market share, tiny. But in the long term, that's where a lot of banks are kind of raising a few eyebrows. When it comes to insurance, you mentioned 8 weeks to change a price. How can being full stack allow you to be innovative and faster and be able to almost be updating prices in real time?
So we have the carrier, as I said, we used that for like kind of a 20% of capacity. We want to change the price from an idea to live. It took us 30 minutes. That was the second pricing change we did, so we'll see how it's going to be in the future. Can you repeat your question exactly? What you mean by that?
In the long term, like
10 years.
10 plus years. Yeah. How is being full stack now going to allow you to be more competitive in 2030?
I think the full stack will, in my view, will become like Stripe API. Everyone can plug in anywhere, any given time, for whatever product, and they just like pay a very simple fee. It's very simple. Engineers love it. They just hook it in, and it just gets massively distributed. Like, genuinely, I think that's from a capacity point of view. And on the other side, you just kind of need to load with regulatory capital to be able to handle this. I do agree that there's abundance of capital. But if you're growing like kind of a 5-6x as we've been doing, like it's painful for the regulator and for everyone to see like, well, this is enormous kind of a growth. I think it becomes like a very transactional, and both parties have significant data points, and you can easily plug in and pull out, and I think it's probably going to go down this way.
Excellent. Christian, long term?
Yeah, that's exactly what I think. There will be players who in that value chain that provide that part of the value chain in an excellent fashion at the low relative margin, hopefully, of course, with a high absolute profit. And then all the new players, you can basically start your MGA business with a proprietary data set that gains advantage, plug in, get in real time a customized, not only price, but a customized policy, and start, being that embedded, being that upsell, being it a product that just helps to increase the conversion of your core product. Sometimes the insurance product is not even there to earn money, it's just for increasing customer satisfaction, therefore increasing the conversion of the core product. And you have that, as you said, you have it on Stripe, you have it in the banking world, in any other area where you have category leaders. And I think this will also evolve in the insurance industry. And right now we don't have category leaders. We have full stack in a way of the full value chain offered 200 times in France alone on P&C non-motor alone. With like average, I don't know the numbers in France, but I suppose it's less than 100 million gross written non-motor P&C per carrier. So if you take out the AXA of that world, that's totally non-efficient to run your own tech and data science team. So you will outsource that.
Just to add, the challenge what I've come across, and I don't know how the future is going to fold, is like we spoke to one large car manufacturer who's like, love your stuff, want to work with you, it kind of is incredibly strong. However, we can only work with these large 4 brands, insurers. So there's almost like sense of credibility that comes for them if they're like a large listed companies. I don't know how we get that over because they either have to change their infrastructure to completely accommodate what you suggested, but I don't know how else someone from new can build that kind of a balance sheet reputation that's going to make those large players happy.
We signed Volkswagen, and that's public, and the second large German OEM right now. So it is possible, yeah, it just takes time, and their regulation helps. If you're above in regulated, full stack insurance company, they trust you more than you are just an InsurTech startup. But it takes time.
I think again, if we look at what's happening in banking and payment, it really depends what's the core of your value chain. So if your business is to sell, I don't know, activities or goods, then insurance is a business enabler, adding value. So probably you're going to use very lightweight status and like close to what's a broker now and work with more guys like you. If your core business is underwriting home insurance, then probably you're going to go higher in the value chain and keep some part of the value chain external. But of course, we won't have, or maybe in the longer term, we will have a new technological giant in insurance, but having another AXA that does everything, it's very unlikely that someone recreate another AXA with everything in-house. So I think it's just gonna look like banking today in 10 years. So yeah.
Excellent. Thank you very much. I think we've actually got time for. Have we got time? Does anybody have any questions from the audience? I've got a microphone armed and ready. No?
These are good.
There we are. That's good. That was good. Cool. Can I have a big round of applause, please, for this wonderful panel?